That kind of change result is no restart.
Big move in Bitcoin then, in contrast to all the notes I wrote pre-show, which were telling me that this was going to put Bitcoin under pressure.
The narrative that perhaps this launch of these political meme coins will sap flows from Bitcoin is showing us that it's really not the case this morning. If anything, it's just accelerated the momentum and the excitement around cryptocurrency under another Trump administration.
Hi, Dewald. What is all this FOMO about? Should I buy Bitcoin now?
Are you smoking your socks? You should rather watch my show. You should rather watch my show.
Bitcoin is an ideology that spawned a protocol that created an asset that circulates on a network. The ideology is sovereignty, sound money, freedom and property rights, right? Dignity of the human spirit, ownership of your life force, economic sovereignty and immortality. That's the ideology of Bitcoin. And Satoshi gave us that.
Altcoins come and go, narratives change, but Bitcoin is the truth. The hardest money the world has ever seen. I thought about it, long and hard, pros, the cons, dug deep, questioned everything. And at the end of the day, you've got to make up your own damn mind. I have conviction. This is freedom. I'm a Bitcoin max. This is freedom.
All right, legends. I hope you all had a fantastic weekend. Let me put the music softly here in the background. There we go. The level that I like over here. Hope you all had a fantastic weekend. Let's do a little bit of technical analysis here on the price of Bitcoin. 2 successful trades. The pro members watching this live stream, you know exactly. I highlighted 2 trades and both of them playing out to perfection. Right. And I hope you took a break from the charts on Saturday. Just reset your mind. And now it's Monday. Got a little bit of a rally here to the upside. And we are going to talk about the probabilities. Well, what is the structure? Since we made the low over here, okay, on the Binance chart and Bybit chart, well, we still have a higher low. Okay, we have not claimed the full week just as yet. But on the Coinbase chart, you know, we have a lower low, a lower low, a lower low, okay, a lower low. And from a local market structure perspective is that, you know, the one thing we have to pay attention to, you have a high, you have a low, you have a lower high, you have a lower low, Can this now be a lower low, a lower high? And now we're going to create another lower low, continuing the trend to the downside. So this is the danger, and this is also why I put in the thumbnail is the low in. Okay, we are still in the danger of taking this low again. Still in the danger of taking this low, just from a structural perspective, just looking at the local, and I'm specifically referring to it as the local structure here on the 1 hour time frame, because on the daily time frame, okay, the structure is bullish. Okay, on the daily time frame, we still have higher highs and higher lows. Okay, so the trend is still up on the daily, so it's still in your best interest to look for longs, okay, from a larger time frame perspective. So it really depends on the time frame that you use to do your trading. If you're an investor, well, the trend is your friend until the end, and the trend has still not been broken. From a day trading perspective, okay, or a swing trading perspective, you know, yeah, on the 1 hour time frame, well, the local trend is still to the downside. Okay, so remember to smash up that like button if you haven't done so already. I will go through the comments in a moment. Let's tackle a little bit of Bitcoin analysis. The king of crypto, the only coin, cryptocurrency that does not have a team of people behind it. Okay, which actually makes it better. Believe it or not, it makes it better, because when there's a team of people behind something, people make mistakes, people resign, people die. There's lots of things that can go wrong with people that impacts the performance of the project. Okay, not Bitcoin. That's why I'm a Bitcoin maxi, as per the music song that just played. Right, so legends, I'm gonna go through the local structure here, but okay, let's just keep it simple. From a structural perspective, okay, it's not looking great just as yet. So for market structure to change, you really need to take out these highs. You need to take out the highs, form a higher low, and start changing market structure locally. So unfortunately, it's not time for the bulls to celebrate just as yet. The local structure is still down, which means that you can take this low again. And structure was always more important than anything else. Structure. Okay, quite interestingly, okay, I'm going to go through that now. Where did we reject? But before I get to that, hello legends, Bolo, welcome to the live stream. Let me just quickly say hello here to everyone. Bolo, welcome to the live stream. Love the singing on the song. Cap City, absolute. It's amazing. I love it. My brother helped me put that together. MK Alexander, morning legends, like button smashed. Thank you so much. Joe SGR, smash the like button. Joseph, thank you so much. BTC Maxi, yes, I am a BTC Maxi, and I can tell you now the majority of my portfolio is in Bitcoin, because with the altcoins you just never know. Okay, can I buy Bitcoin now? Well, you better watch this show, right? ID Darkstrucker, hello Dewald Legends. I shorted 116. Okay, most probably that little wick over there. It's magic. Hi Dewald, welcome. Okay, let's continue. I always appreciate the mod here being in the house. Welcome Legends and Dewald. Let's carry on. Right, yes, Jack. This is exactly what I want to talk about now. Also, we have a 112, maybe 2 4 5s. Yes. So there's also a possibility for a 112, but let's just keep it conservative and simple over here. There's a possibility for a 112. Now, if you have a 1 2 1 2, you need to see a repeat of the structure to the downside. You get the 3 with the highest amount of volume. Perfectly fine. And now you want to see 4 5 4 5. Okay, right, the structure needs to slow down, and ideally you want volume to go down as well as you eat up the low every single time, which is happening at the moment. Highest amount of volume in this drop, and now you want the lows to be claimed with decreasing volume, which is happening at the moment. Okay, so one of the possibilities we need to make sure that we have in mind is that we could come and eat up this low again. And then on all other exchanges, okay, finally we would have made finally we would have grabbed the liquidity below this wick and make a low. Okay, eat up this low, get acceptance back above. That's a potential longing opportunity, right? So there is definitely still a chance for one more, at least one more low, if you are counting the structure as a double 1-2. Then you can be a little bit more creative and say, well, I can count a triple 1-2, but I must say, guys, a double 1-2 does count better. It does look more like a 1-2, okay? 1, 2, 3, 4, 5 in the smaller time frames, 3 minute, 1 minute time frame. I can count a 5-wave structure down over here, corrective structure, and then a 1, 2, 3, 4, 5. Okay, corrective structure. So a double 1-2 does count better. And after a double 1-2, what you would like to see is a 3 with the highest amount of volume and a 4, 5. So we got the first one already, and you want to see another 4, 5. So definitely a chance for this low to be claimed again. And there's a very specific level that I'm watching. Okay, if we do tank down here, creating massive fear at the moment, people already saying, you know, bear market. I see everyone's thumbnails. You know, I put bear market in my thumbnail, and then I discuss the probabilities of, well, what is the chance of a bear market at the moment? So for those of you that has been following me, you know how my stance, where we are at the moment. I'm still expecting at least one more high. Okay, from a higher probability perspective, depending on how this local structure starts to form. For now, it still looks, you know, it still looks like it can make that one more low, and we find continuation back to the upside. Right, because I know a lot of people are watching this trend, and this is why I'm leaving this trend over here. A lot of people are talking about this trend that has been broken. It's only up. It's only up from here. Okay, we're going to take the all-time high once again. It's only up. Right, I am not so convinced just as yet because of this local structure. Based on the price action that I see at the moment, I am not convinced that it's only up from here, just as yet. Okay, so just in summary, to wrap this up, double 1-2, okay, 3, 4, 5, 4, 5. There's still a chance to take this low. Target that I'm watching to the downside is 1 hour time frame. You just leave it here on the 1 hour time frame. Okay, I'm looking at this structure as from this high as an A, B, and a C wave to the downside. And these structures have very common targets that you can track, right? You take your trend-based fib from the high to the low to the high. And a level that has not been tapped here on Coinbase, 2 levels that I am watching. 2 levels is the 1.382 and the 1.618. I do not want price to go further than this level over here. Okay, let's just leave it at that. There's many reasons as to, from a technical perspective, I don't want price to go down or lose the 1.618. Okay, so the next level, most interesting level, is $102,468 if we do claim the lows again. So I will be ready. Look at the 1.3236. Look at the beautiful reaction that we got. You dip below, you get acceptance back above, you put your stop loss below the low. And I will also show you guys, okay, this is one of the trades that we got into from a community perspective. We actually nailed the pivot here at the bottom, right, using another fib extension. We nailed it on Friday or Thursday. On Friday, I think. I can't remember. I think this pivot was on Friday. We nailed the long year to the upside. Absolutely nailed it. And now we are in a short. Positions already protected. Some of you might have taken profits already to cover your fees. Okay, we nailed the long, and for now, we nailed the short. So, I mean, if you want to be part of the Legends Pro community, link is down in the description if you would like to join. Okay, because that is where I drop the alpha first, guys, and anything can happen, because as soon as price action gives me another clue, often what will happen is I end off the live stream with a couple of scenarios and levels that I'm watching, and then something else happens, or I see another level that I didn't see in the live stream. And then, you know, that is where I drop the alpha inside of the Legends Pro community. We got in over there and we shorted over here, and I will explain exactly why. Okay, because you have to be able to answer your 3 W's, And it's something that I talk about inside of my course many, many times. Why are you entering? Where is your invalidation? And where do you plan to take profits? And if you can answer all three of those questions with high confidence, okay, it's a trade worth taking. Okay, so to the downside, 1.382, 1.618. These are still two levels that I'm watching. It would be very, very strange, legends. I'm not saying it's impossible, but it would be very strange for price to just break down from here, because you already had a massive move with high volume. And inside of any structure where there's a move with massive amounts of volume, and you have the choppiness that started it, and now you have the choppiness that's ending it, it's very strange to get another leg like this to the downside. I'm not saying it's impossible, I'm just saying it's very strange, because most often what happens, 99 out of 100 times what happens is when you have a 5-wave structure to the upside, your highest amount of volume is usually in the middle. So here you have your mess, your choppiness, okay? Then you have that guard candle to the up or to the downside, and then you have your messiness again, and that usually gives you the clue that the structure is coming to an end and the structure needs to start correcting itself. Okay, so it would be very strange just to see continuation, creating this again. Not impossible, but a low probability. It's the easiest way that I can explain it. Okay, so if price had to start falling aggressively to the downside, it would be strange for me to see this. I would expect the lows to be claimed again. Okay, so you have this. You have your drop with high volume, and now price needs to create those triple bottoms. Okay, we already have one, we already have two, maybe we create that triple bottom, but you can see the curvature is starting to turn around. Okay, so technically that is the highest probability for the moment, that if we do take the low again, okay, that the curvature is going to start turning around. And you can even do it another time, because I know that there's some people that's counting a triple 1-2 in the structure, where you want to see a 3 4 5 4 5 4 5. Okay, but it starts turning around, so you get the choppiness to the downside, but you don't get a successful breakdown. Okay, where you break down, you retest the zone as resistance, and you continue the momentum to the downside. I do not see a high probability for something like that to happen. Okay, what could happen, okay, make no mistake, what could happen is, but it needs to come after a larger retracement. The worst case scenario that could potentially play out over here, okay, is that you form your 1 2 1 2 3 4 5 4 5. You get a larger retracement. Maybe you come and find resistance over here. Okay, you make a lower high and then you dump. That is fine. That is perfectly fine. Okay. So that little structure is going to be very important to analyze. Is it a corrective structure to the upside, or is it a 5-wave structure to the upside with a corrective structure to the downside, where we could be looking for longs? Or if it's a 3-wave structure, I will be looking for shorts. Okay, so there's still, unfortunately, a lot that needs to happen, okay, for me to place probabilities on what is going to happen here in the future. But at least if the bear market is starting, okay, if the bear market is starting, I would like to see this and a retracement. Okay, you form a lower high. Okay, I don't want the 0.88 to be tapped, because that will actually give probabilities to the bull. So wherever that low is going to be formed, you want the rejection between the 0.382 and the 786. Okay, if we are still going to get another massive leg to the downside, because then this forms your wave 1, this forms your wave 2, and you go down for a third wave. And this repeats itself, but more aggressive to the downside. Way more aggressive than what you saw over here. It absolutely tanks. It falls like a rock out the window. Okay. So, yes, I'm not saying we cannot go down, but I'm saying there's a higher chance we go down after a deeper retracement, if we are going to enter a bear market. Because for the bulls, you do not want to see a 5-wave structure down and a 3-wave structure up. You do not want to see a 3-wave structure. If I see a 3-wave structure up here, I can tell you now that I am going to exit my position. I'm out. My spot bet, I'm out. I cash out. I'm out. I don't care if it goes higher, I'm out, because you do not want to see a 3-wave structure up after a 5-wave structure down. It's not what you want to see. Okay, because, you know, from a wave analysis perspective is when you have 5 waves to the upside and you have 3 waves to the downside, there's a much higher probability that you are going to continue the momentum up and take out the high again. So it's basically now just in reverse. When you have 5 waves to the downside and you get a 3-wave structure up, this is where you short. That's not where you long. Okay, even if you've broken the trend and people think we're going to higher levels, you're going to eat up the high. If there's a 3-wave structure to the upside, there's no ways I'm longing over here. Okay, which actually explains the short that we got into today on the smaller time frames. So let's just put this back. Okay. Right, so legends, on Friday, okay, why did we long over here? Why did we long over there? Because there was a very interesting fib that got very well respected. When I take a trend-based fib from the highs, okay, to the low, to the highs, and I just drag it across, okay? Whew, I mean, look at this, guys. Look at this. Let me just reverse the price action, okay? Now, that is what happened on Friday. This is where we all got into a long. 1.618, because every single level got so well respected. Price bounced on the 0.618 and we got that bounce. It fell, one-to-one extension, we got a bounce. So now you can see, well, this fib extension, okay, there's a reaction at each level. So you need to pay attention to these levels. And then when price made this little dip, you know, I think price was over here where I posted this fib extension. I said, guys, pay attention. And I saw a lot of pro members, congratulations. A lot of pro members jumped into this long. Okay. And now we got a nice little bounce here to the upside. Some of you cashed out, like myself. I already cashed out that position. I was so happy with the profits. Great risk management. And now I'm currently in a short. Okay. Right, so let's just cancel this. Okay. So now we got the momentum here to the upside. Okay. And this is where I closed my position. Well, this is where I had my TP set, my final TP. That's where I closed my position. I don't care if price goes higher. For me, it was about having a successful trade, right? You get in, you get out. You can leave some of the moonbag open, a little bit of the moonbag, 5-10% of your position open for higher levels. Perfectly fine. But for me, this was quite a significant trade here to the upside. A really nice trade, I must say. On 2 of my accounts, BTCC and Bluffin. I took this trade on both of those accounts, made a nice little profits. Okay, if you guys would like to trade with me, links are down in the description where you get the best possible sign-up bonuses that those exchanges has to offer, and all you need is an email and a password. Okay, so now, why did we short over here? And if I get stopped out, there's another level. There's another level that I'm watching. I haven't taken profits on this trade yet, okay? Because there's a chance that price can take this low. There's a chance, okay? But my first TP area has not been hit, which I'm going to explain now on the smaller time frame. But if price for some reason comes back up, from a simplicity perspective, that little pivot, Okay, if we swing that pivot, basically you get above the pivot, you pull down below these highs as well. Now I will attempt another short in that zone. Definitely another short will be attempted in that zone if price reverses, stops me out at break even, not losing any money. There's a specific level that I'm watching. Okay. So these are day trade, guys. This is not from an investment perspective. Yes, you know, I mean, if you believe that this is the low, okay, and we are just going to go to all-time highs from here, then, you know, at least take profits to the upside. Make sure that your stop loss is above your entry so that if you are wrong, you at least don't lose any cash. Don't be that person that just keeps on adding. If price comes down here, you just add, you add. Okay, don't be that person. Right, so now let's take this out the way. Let's go to the smaller time frames. 15-minute time frame is my favorite. 1 hour and 15-minute time frame is my favorite time frames to trade on. Okay, because it enables me to at least have 3 trades a week. And I'm very happy with 3 trades a week. I don't have to trade every day. Sometimes I don't even trade for the whole week. Okay, so the level that we got into a short this morning is, well, from a point of control, we got a beautiful rejection at a point of control. Okay, but this also had other confluences. Beautiful rejection. That's where we got in. I hope everyone got in the pro community. I hope you all got in. Okay, also from a because you guys know how much I love trend-based fib extensions, I was looking at this structure as being a 3-wave structure up. Okay, so it's either a or it's a W. Okay, it's either A or W, but this little retracement went too low for A. Okay, it needed to come down further, at least to the 0.9 Fibonacci. Then I would have said, okay, this is a A, this is a B, and now we're going up for a 1, 2, 3, 4, 5 for a C wave to the upside, but it didn't retrace deep enough, so I'm labeling this as a WXY. So I think I do have that scenario already prepped out over here. This is the scenario that I am currently keeping an eye on. Okay, you formed a 3-wave structure in a W, long, boring Saturday, guys. That's why I say take a break on Saturdays, especially on Saturdays, because this is what we got on Saturday. Boring price action, up and down, sideways, small little moves. It's not worth trading on Saturdays. Okay, so if ever you want to trade every single day, you need to give yourself a break as well. And Saturdays statistically are the best days just to switch off your computer. Okay, put your phone on silent, don't look at the charts, because this is what you got on Saturday. Right. Anyways, then yesterday on Sunday we got the volatility to the downside. Okay, we got this nice little correction to the downside and momentum here back to the upside. Correction, this all happened. Okay, this happened on Monday, which is today, and now we got another leg here to the upside. So this structure for the moment counts better as a corrective structure. For the moment, it counts better as a corrective structure based on the price action that I see right now. 3-wave structure in W, complex corrective structure in a X, and now an A, B, C to finish off your Y wave. Okay, and you can see also where we got rejected is at the 1.382. I only had 2 levels highlighted for the pro community. Okay, I try to keep it as simple as possible. When you take a fixed range profile for this entire range, okay, there was only 2 levels that I highlighted for the pro community. I said, guys, either we're going to reject at the 1-to-1 extension together with a value area low, and we did get a small little reaction, but it wasn't enough. There was some local bullish CVD, so I left the level alone. Okay, or it's going to be at the point of control of this entire range together with a 1.236, 1.382. And when price this morning, okay, the pro members know this, they know it, they can vouch for me, okay, when we were over here, I saw people were starting to short already. And I just posted a message and I said, if my level does not get tapped, I am not entering the trade. If price wants to roll over here, I'm happy to miss the trade because I know there's always another trade around the corner. because it was chopping. And if price had to fall down here, I was very happy to miss the trade because it didn't follow my rules from a trading perspective. And 15 minutes after I posted the message, okay, we tapped the level. Okay, and that's where most of us jumped into a short. And the reason I'm going through this step by step, explaining how we got into the trades, the levels, is so that you can learn to do this by yourself, so that you can fish by yourself. You don't have to watch any other YouTube influencer. Okay, this is the reason I spent so much time on explaining why we got into the trades. How did we get into the trade? What am I looking out for next, for example? Because I got a couple of comments from people last week saying that just get to the point. Tell us where we can short and tell us where we can go long. No, if you want me to tell you the whole time where you need to long and where you need to short, this is not the channel for you. Simple as that. That's not why I started this channel. Okay. I didn't appreciate those comments, firstly, okay? So, I mean, go somewhere else. Like, seriously, go somewhere else. Yes, I always do explain my areas of interest, and they do turn into trading opportunities. But I'm not going to have a live stream where I just tell you short here, long here, stop loss here, take profit there. No, because then I'm giving you signals, and signals doesn't teach you anything. It doesn't teach you how to trade. It just teaches you to keep on following me, okay? And what if I'm sick or I'm not? I don't do a live stream for the next day. You don't know what. Like, no, guys, you need to learn to do this yourself. Okay, you need to learn, and that's why the pro members. That's why I love the pro members. Always asking the right questions. Dewald, why did you short here? Dewald, this trend line, would you have taken that? Like they just, I love the pro members. They ask the right questions, not just, where do we enter? Where do we short? No, guys. There's there's hundreds and thousands of signal groups out there. Like, go follow one of those people if you want signals. This is not a signals channel. This is where I teach you how to trade properly. Okay, so that you could potentially even resign from your 9 to 5 and do this full time. Because if you know how to do this, okay, you will be consistently profitable, especially if you can master your mindset. Okay, so another level that I'm watching. You guys, I'm always, when I enter a trade, I'm trying to play out worst case scenario as well. What if? So I entered a little bit late. I entered around about here with my stop above the high. And guess what? My position is now protected. So what I told the pro community is, if I get stopped out, simplest way to explain it, if price decides to move up here again, okay, I want it to reject again from the highs. I want to see this. Okay, it needs to pierce through the level and it needs to start trading below. That's where I put my stop loss. That's where I enter. And then I will definitely attempt another short in this zone, because you could have a larger 5-wave structure to the upside in a C wave. This could be your 1, 2, 3, 4, 5. Okay, or maybe this is a 1, 2, 3, 4, 5 that's done. So it has a chance to roll over, and this is why I entered the trade. But if it wants to make another high, I will be ready. Okay, so if I take this out the way and I just measure the last movement. So now I'm counting this little structure as an ABC, okay? An A, 3-wave down, B, and a C to the upside. So there's another level here that I'm paying attention to. So if price wants to stop me out, okay, there's another entry that I can, or a short that I can attempt over here. And that is basically taking a trend-based fib from this low to the high, to the low, and guess what? Okay, we got the rejection at the 1.236 together with a naked point of control. And if price wants to stop me out, that is the next level that I will be paying attention to. I will look at the 1.618 as well, okay? But for a WXY corrective structure to the upside, this is a rare target. Not impossible, it's not an invalidation, but it's a rare target. And this is why I am paying attention to these levels, more so than these levels here to the upside. Okay. Right, so that is basically in a nutshell what I'm looking at, guys. So we got the rejection. Looks like we're getting the drop. I want to see if there's some local... There was some local berry CVD building up as we made this retracement. Double top. Yes, I will be interested in another short. And right, so let's see how this plays out. Let's see. Let me go through some comments. It touched your naked point of control perfectly. It did, didn't it? And a lot of people will ask me, well, where did you get this naked point of control? First way, well, best way for me is you go onto the 1 hour time frame. Guys, as you know, I love to educate, okay, not provide signals. Okay. So first way you could have gotten it is just to do a fixed range profile on this consolidation, and that is where the most amount of volume was traded. That's also where we got the rejection. Second way is that you could have switched on your session volume profile. Okay, session volume profile, switch it on, just wait for it to load up. Okay, let's zoom into that price action, and you will see that my naked point of control was actually over there. I adjusted it based on that higher volume node, but regardless, whether you put it here, whether you put it there, you got the same result. Okay, got the same result, doesn't matter. Okay, so there are all your naked point of control. So if you were wondering where I got this one from that has not been tapped yet, well, you have a naked point naked because it has not been tapped over here. This one is now not naked anymore. It's now just a point of control. It's not naked anymore, but I'm just leaving it there because that's the one we traded this morning. And then here we have another one, okay, which I've actually forgot to include. So what I like to do is I clone it, and then here we have another naked point of control. So if you are in a short, okay, just from a simplicity perspective, and price falls to the downside, these become TP areas because you could SFP and gain momentum back to the upside. So it becomes a longing opportunity. Okay, and it becomes a longing opportunity. Right, so these levels are powerful, especially when you combine them with other things. Elliott wave theory, okay, Fibonacci retracement, Fib extensions. Like, these levels become really interesting, for especially when I saw the WXY scenario that could potentially play out here to the upside. Three wave structure in a W, complex corrective structure in a X, and now you have a point of control that is also at the maximum target of a Y wave. Now that is interesting. So from an Elliott wave perspective, I'm expecting the structure to stop. Okay, I also have a naked point of control. I also have the point of control of this entire range. Okay, so when confluences starts lining up, Elliott wave theory, levels, okay, then it makes a perfect trading opportunity. Right, so that's basically the trade that I got into this morning. Okay, so there's another long opportunity that could come up. So, you know, I have to play what if scenarios with myself. What if price goes down and it does this? Well, I can trade that. Okay, but I need something to happen first. So there's a chance that price can dip a little bit further and make one more high, reject, and then come down. And I want to take advantage of that little move. I saw it this morning. So if I go on to, now I'm going even a little bit smaller. Now I'm going on to the 5-minute time frame. Okay, guys, this is now extreme scalping. And we have a range low strategy that could potentially play out here. Range low. One of my favorite strategies, or a favorite strategy. Let me rather put it like that. Okay, and I'm going to call this the range low. So I take my little magnet, okay, make sure your magnet is switched on, right, and you snap it onto this little low over here. For those of you that's never heard about a range low or a range high, usually when you have a little bit of choppiness, okay, and you get a nice candle with high volume to the upside, that first low that it makes okay, and it continues momentum to the upside. That little low after your high volume candle is what I call the range low or the range high, depending on, okay, if price was in reverse, I would call it the range high. Let me take the scribble out here. Okay, you have a candle to the downside. Obviously, it will have been in red volume. Okay, price continues to the downside. It comes back up. Okay, now it's my range high. So I just reversed the wording. So what I would be paying attention to, okay, because there's always a what if. What if it's not a WXY and price just continues to the upside? Okay, I need to be aware. What if price comes down here and it just continues to the upside? Well, okay, I want to hedge against my short. Okay, guys, hedging is not just opening up a short and a long and hoping, closing your eyes and hoping for the best. That's not hedging, guys. Ooh, okay, I see people throwing the hedge word around, and I'm like, no, you need to do it properly with good risk management. Okay, that was the shorting opportunity. We shorted. We didn't hedge. There was no hedging happened here. That was a shorting opportunity. But I can tell you now that if price comes down, I call this strategy the tap and go. Because it needs to tap the level and it needs to go. And not tap it again. Why I like this strategy is that if price, okay, there's a couple of rules with the strategy. The best way to explain it from a successful trading perspective is it needs to tap it and it needs to leave almost a wick behind, and it should not tap it again. Even those retracements, you don't want it to tap it again. And it's usually a beautiful trade for me because you can protect your position quite soon. Once you get the dip below, you get acceptance back above, I already start protecting position. You can be very aggressive with protecting your position because you want a tap and go. Even if it comes back for that retest, ideally it should not tap this level again. Okay, and it needs to go to claim the high. And that's usually the target, the profit targeting area for a range low strategy. The high is always your profit taking area. So this is where I will be looking for a long. Depending on what happens here, I will be hedging, okay, my short again with this long. And now this is where hedging becomes powerful because this position is already protected. You have a free trade. You take profits. Okay, make sure that you take profits from your short over here. You get into your long. Okay, then if you get stopped out of your short, okay, you now have all the profits from your long over here. That is proper hedging. Because if it wants to turn around and continue to the downside, well, then you're still making profits from your short. You get stopped out of your hedge at break even. Not you enter, you have a stop loss here and you have a stop loss here. And then what price does, it stops you out, and then it falls to the downside. That's not hedging, guys. That is just pure gambling and speculation. And often what happens is you get stopped out on both sides, and then price falls to the downside or to the upside. Okay, I've seen people make this mistake many times. They're like, no, I'm going to hedge right over here. I'm going to put one stop loss here for my short, and I'm going to put my stop loss here for my long, or my stop loss here for my long. And then it stops you out on both ends. It's not proper hedging. Okay, so more rules for this strategy. If price, does not tap and go, it stays here and it chops. Price chops at this level. It increases the probabilities that even with a bounce, it's going to fill the inefficiency. So I do not want to see a consolidation at this area. I don't want to see choppiness in and throughout the line. So you could still get the bounce and people, okay, here we go. The range low is now playing out. And then it finds resistance, and it fills the inefficiency. So that is the rules of the strategy, and it's just probabilities, guys. You can get the choppiness and it takes the high. I'm just saying, what are the rules for the strategy? The rules for the strategy says it needs to tap and go. in order to claim the high. If it consolidates or starts closing candles below the zone, it's going to fill a higher probability that it's going to fill the inefficiency. So if I see choppiness over here, I'm holding on to the short. I'm not closing the short just as yet, because I know that it could still form a lower high and fill the inefficiency, and this is where I will take more profits. So there's unfortunately a couple of rules that you need to keep in mind for this strategy. Okay, and it's just based on probabilities. What plays out the most? So out of every 10 trades that you have a range low, out of every 10 range lows that you play, how often does it do this? And how often does price chop and fill the inefficiency? And there's always those outlier scenarios that happens. It chops, it still ends up taking the high. Okay, it does happen, but I'm saying that out of 10 times, if it happens 8 out of 10 times, then I'm rather going to play the probabilities. Because that's what trading is about. It's about smart trading. Okay, it's a trading with probabilities. It's not gambling at the end of the day. Okay, so let me go through some comments. Tap and go. Phantom, yes, it needs to tap and go. And for those of you in the pro community, you know this. You know this already. It needs to, and it can be quite a, let's see over here. If we do have some confluence. Let's take this pivot. Yeah. Because it could be a 1, 2, I'm not going to count the structure in detail, but this could be a 3, okay, 4, should not tap the 0.618, claims the 50%, and it goes back up to complete another wave, and then you get the momentum back to the downside. So still interested in the shorts, interested in a long, depending on how price reacts in this level. It could also do this. Remember, it could chop, 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 chop. As soon as you tap the 0.618, okay, taking a fib from this low to the high, you increase the probabilities that you might not get this. Okay, it's just gonna continue to the downside. So as price develops, I will make a trading decision. If I don't see what I like, I will not enter the trade. So there's still a lot that needs to happen. Okay, and this is why, guys, I cannot provide a signal. I can't come here onto the live stream and say, guys, it's now or never, right? This is the trade that I'm going to take. If price gets here, okay, so put your limit orders here, guys. Just put all your limit orders. Okay, go in 100% of your cash, 50x leverage. Okay, you know, let's go 50x leverage, all of your cash. And this is where you take profits. This is where you put your stop loss. Okay, just joking. I just cannot tell you that because I need to see what price is going to do when it gets there. Depending on what price does when it gets there, I will make a trading decision. Okay, so if you want a signal, well, here you go. Okay, I might not take this trade. When price gets here, I might not take the trade. And then tomorrow I have people upset with me because they will say, you said this is going to happen. And now I got stopped out and I lost 50% of my portfolio because I went in 200x with everything that I have. This is why I do not provide signals. I'd rather teach you how to do it properly and then you go and click the button. Okay, you go and click it. I've explained to you the rules. Okay, right, legends. 50x leverage and all of my cash. Go, Phantom, go. Okay, and I want you to post a message tomorrow. Okay, either I'm going to get a beautiful message like, well done, Dewald. Okay, I'm able to pay back my student loans. Okay, or I'm going to get a message, worst technical trader ever. I'm unsubscribing from your channel right now. You know, guys, these are the emotional things that people go through. And I'm not saying it's any of you guys watching this stream, because you know what I'm about. You know that I love education. But new people joining, this is the messages that I get, okay? Dewald, you said we're going to bounce here, and then we don't, because they don't listen to the rules. They don't know how to trade properly. They can't answer the 3 W's. They don't know where to take profits. Okay, they just see this little tool and they're like, limit orders, here we go, limit, 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 and I'm just going to limit myself into this order, and then eventually you get, you know, they're like, okay, well, shit, and now I'm so deep underwater, I can't take the loss anymore, I'm just going to keep on adding, it has to turn around at some point, and then the account is gone. Okay, anyways, guys, it's not a signal, okay? I need to see what price is going to do when it gets there. Right. 1%, well done, Dewald. 99%, you suck. Yes, it's exactly. 1% of you will tell me well done. The other 99%. Anyways, it never gets old, the comments that I get after successful trades and unsuccessful trades. It's never old. Do you use VWAP? Is it more accurate on 15-minute? A VWAP. Is it just the VWAP? Or is it the... What is the... Oh, the anchored VWAP. The anchored VWAP actually works better on larger time frames. So 5-minute, not really, because you can take your anchored VWAP here. I know Andy loves the anchored VWAP. Okay. No, man. Is this the right thing? Where is that anchored VWAP? Oh, there we go. Put it on the low. Okay. Guys, I've never... who asked the question? Jay Payton. I unfortunately cannot answer this question with high conviction. I have personally only used the anchored VWAP on 15-minute and above. I've never used it from a scalping perspective, 5-minute time frame. So I don't know how the anchored VWAP is going to react on the 5-minute time frame. Okay, I don't know. Okay, so I have not backtested it. I need to backtest something before I can give you a concrete answer. I have not backtested the anchored VWAP on the smaller time frames. On the larger time frames, 15-minute, 1 hour, 4 hour, they offer nice support and resistance, especially if you have confluences lined up with that level. Okay, that I know from a backtesting perspective, and I've seen Andy speak about the anchored VWAP many times, but I see Andy also uses it on larger time frames, 15-minute, 1 hour, 4 hour and up. So I'm not sure, okay, about the smaller time frames because I haven't backtested it. The answer could be yes. Dewald, for some reason my swing, my SVP and VRVP doesn't sync. That's why I struggle with volume levels. What do you mean it doesn't sync? Not sure what you mean, Jack. What do you mean it doesn't sync? Okay, I'm not sure what you mean. So just teach us what price will do on that point, which make us decide what to do. Yeah, Devil's own. That's exactly what I did, okay? A range low strategy after you have a high volume node, okay? That first low that you make, the rules are actually very simple. You want to see a tap and go. It should not come back. So once price dips below and it starts getting acceptance back above, that is where I pull the trigger. Okay, and then I know where to put my stop loss. And I'm happy to get stopped out of this trade because the rule says it's not allowed to tap the level again. If it taps the level, even with a retest, okay, it already increases the probabilities that you're going to fill the inefficiency. So it should tap and go. And your target is claiming the high. Okay, if price dances around in this area, it's chopping. What I've often see happens is it still gets the bounce, but it rejects and it fills the inefficiency. Those are the rules of the strategy. So maybe I'll, I can't predict the future. So maybe let's say this happens. It dips below, it gets acceptance back above, and I enter. And I put my stop below the low. And now it does this, it chops. So I can either decide to get out of the position before my stop loss hit, or I just take the knock. Okay, I don't know what's going to happen here. So maybe tomorrow, after this is played out, if it does fall to the downside, then I can tell you, well, how did I actually execute the trade? Or did I get stopped out? Did I make profits? Did we claim the high? So tomorrow we can talk about this. But I need price to get here to make a trading decision. Okay, if price dips below, and as long as price is below my area of interest, no trade. It's no trade for me. Okay, if price is here doing this, there's no trade, guys. No trade. I'm not trading in this zone. It needs to get above. It needs to get above. And also, if it does this below, I'm not getting into the long. There's no ways I'm getting into the long. That's why the best way for me to describe the strategy is it needs to tap and go. Okay, if it doesn't tap and go and it stays there and it consolidates at the area, that's usually like, it's gonna come full as inefficiency. Right, legends. That unfortunately all I have time for today. Okay, I think I have discussed the higher time frame. 15-minute. I for the moment I'm just trying to look at the structure here to the upside based on what the structure looks like right now. I cannot count an impulse at the moment, guys. Okay, because you started this with a 3-wave up. It's a 3-wave up. Okay, so the only scenario that you can start with a 3-wave up is a diagonal. Okay, so let's do this, or double 1-2s. Okay, so maybe you've got it in a diagonal. So I'm trying to find bullish scenarios here, guys. Is that you have a 1, 2, 3, 4, 5, A, B, C, and we continue to the upside. Okay, there, I just want to see, well, is the 5th wave shorter? Because I know some of the Elliott wave theory counters are going to say, Dewald, 5th wave is longer than 3rd wave, not allowed. Let's see. Yeah, it's not allowed. Not allowed. Your 5th wave is longer than your 3rd wave. It's not allowed in a diagonal. So based on the price action that I see right now, it looks like a corrective structure to the upside. Okay, I saw some people trying to count it as nested 1-2s, where they have 1, 2, 1, 2, 1, 2, but then this 1, 2, 1, 2. I mean, it's incredibly long compared to that. Okay, I cannot give a bullish case scenario based on the price action that I see now, the highest probability. Based on what I see now, okay, this structure looks more corrective than impulsive, which means it has a higher chance to claim this low again. Unless something else happens, okay, unless something else happens, I can start counting something else. But based on what I see now, it looks like a corrective structure. It's also respecting the targets very nicely. Cheers, Dewald. Lekker Monday. Yes, same to you, man. Cheers, Dewald. Great. Thanks for explaining, Dewald. Pleasure, man. Please check ETH and range low. It seems we touched it several times. So this is a nice example how not to take a trade. Let's go and look at ETH quickly here for the legend. Thomas, let's look at ETH. Does it always also have a range low? Yeah, you see this. Yeah, now this is what I don't like to see. So let's go to the 5-minute. Okay, so on ETH, you also have a range low. It's any of these two. Let's just put it there. You have a range low. Now this is what I don't like to see. This is what I don't like to see. Okay, from a rule perspective, when you have a high volume candle, like I've explained, okay, so the rule of the strategy says if you see a consolidation at the area of interest for a range low, it increases the probabilities that even with a bounce, you're going to fill the inefficiency. Okay, so let's see how this plays out, okay? Because there's also a nice little trend that's forming there, so it needs to break out successfully for you to go and claim the high. It's not guaranteed, guys. It's a game of probabilities. If ETH wants to break out and go and claim the high, well, then it needs to go and claim the high. And then I'm going to say, well, now 2 out of 10 times that this plays out, it went and it did the opposite thing. But now this, if you wanted to get into a long believing that we are going to move higher, well, this is where you needed to get in. I don't like that at all. So on ETH, it looks like even with a little pump to the upside, it's from a probability perspective, it looks like it's going to come and fill the inefficiency. Okay, I actually have not backtested this strategy on altcoins. I've only traded it on Bitcoin, so it would be interesting to see what's going to happen here on ETH. But it looks like it's pumping here without volume, so there's no volume kicking in here at the moment. So this could be, you know, and this is resistance at the moment. So not sure if it's going to break out successfully. Yeah. Right, legends, that's unfortunately all I have time for today. Have yourselves an amazing Monday. Until the next one, cheers for now.